because actually I lived in Norway, in Finland. I also teach in Russia, in US, in Iceland, and I live in maybe 25, 30 countries from East Africa, Central Africa, Latin America, Middle East, and some parts of Southeast Asia. So I have an experience in maybe 65 countries that either as working for oil and gas companies or law firms or as academic. So what I've been giving here is a follow-up of what Nadia was mentioning, but from an international perspective. And of course, I'll be focusing here on the upstream, because oil and gas, you have everything from you trying to find, which is exploration, then you find something, you need to see if it's commercial viable, which is development, then you reach to production, then probably you need to do something with this oil and gas. We go to maybe transportation, you refine, then you go to the final destination. I'll be focusing on the first part, which is the exploration and production. Apart from United States of America, mostly onshore, and a few parts of Canada, oil and gas belongs to the government. Different constitution might say people, federal government, local government, regional government, whatever, but it means the government. And the government is a broad definition. You usually have the ministry. Quite often you have the Ministry of Oil and Gas or Energy. Few places refers to the Ministry of Business. And also you have agency. Not often you have an agency. And here you just have a colleague from agency. You have usually they refer to National Petroleum Agency, Institutes of National Petroleum Agency, something similar. Then you usually have here in Greenland, you have as well a national company, which is a company that is 51% or even 100% owned by the state. And you have the investors, which can be a private entity or even a foreign entity from a different government. And what you need to understand here, especially when you think about public consultations and training, everything in this oil and gas industry refers to two words: risk, reward. As more risk you have, more reward you expect. Less risk, for example, I lived in Sudan and my company was working there. And of course, our expectation was very high because you could be kidnapped and you can have terrorism and you have political issues and so different issues. Then you go to Norway, you have access to infrastructure, it's a very stable country, you have the markets, of course, the margin is going to be lower. So you have basically two different issues, below the ground issues and above the ground. Below the ground is geology. If you're not familiar with the oil and gas industry, out of 10 times you're trying to find oil and gas, only one is successful. And you're drilling. When you're drilling, it varies if it's onshore or it's offshore. Offshore might vary between $25 to $250 million one well. And you need several wells. So imagine how much money you need to have to invest maybe a few billions. And maybe, for example, BP in Brazil lost $3 billion, make zero profit. And they're still there. How many people can do that? BP in the Gulf of Mexico has an accident, which is the environmental risk, cost them $50 billion. How many companies here can do this? And that's an issue you have. If someone go deep offshore here, make a spill, it can be even worse than the Gulf of Mexico. Who pays for that? And at least I was looking at the list, Eni can pay for that, Statoil can pay for that, and a few others can pay, but some probably cannot pay. So there's a risk the government should consider before awarding a license. Then you have technical risks, and here now it's getting better, because before it was not viable to come to the Arctic. Today it is. Then you have the above the ground. For example, I went to Tripoli a week after Gaddafi was gone, and people were checking in the hotel with hand grenade and AK-47. I was the only one with a mobile entering in the hotel. And the question, with whom I negotiate? There is tribal one, rebel 1, 2, 3, 4. I don't know which one is going to be in power. So you have those issues when you work with political, because your contract might be valid for 20, 30 years. Security. Who is going to do the work for you? In the Arctic, you don't have this problem. But even from a financial point of view and stability, for example, as an investor, if I'm aware that now you're adding royalty, I'm very unhappy about that. You didn't have that before, and royalty is very negative because royalty comes out of the top. Imagine I have a franchise of a McDonald's here. If I have a royalty, I'll ask you, regardless of how much money you make, you give me 10% to 20% of that. But you say, but hang on a second, this month I have losses. Doesn't matter, you still give me 20% of the top. So that's why UK Norway abolish it. And of course, from a government point of view, it's good, because I get money regardless of what's happening. And that's the issue we have to think, because as more cost you add, you have countries neighboring to you giving more benefits. So you have to compete, governments compete as well. You have the social stakeholder. As an oil and gas company, and I work with some of them, I'm very concerned about that. but there are different levels. Because when you're doing exploration, there is no real impact. There is very minor impact to find the survey of the area. It's very different when you start to produce. Then yes, then I might be willing to spend more money. So that's why you need to work those issues. Legal issues. If you go to Iraq today, you might have different regions there. With whom I'm signing? Is the Kurdistan government going to be, and you think that, okay, Iraq is very unstable. But how about Catalonia in Spain? How about the Brexit? So there is no country which is completely stable. And need to work with those legal issues. This is just to have an idea on how it works. I hate this thing. And here you see where you start to get money come from. You maybe do some studies, then you do some exploration, then you might do development. This is exactly what's happened here in Greenland. So if things go well successful, the government start to see this royalty from oil and gas, not mining. From oil and gas, maybe anything between 6 to 15 years from today, if not 20 years. So that's why people don't think about it. You're thinking about, oh yes, oil and gas, fantastic, like in Mozambique. 10 years ago, they went there, they found this one of the largest gas discovery. Past 10 years, they still didn't produce because they need a huge infrastructure that costs $50 billion. And how you produce that? You need to do project finance. So you need to sell what you don't have to raise finance with the banks to self-finance the project, and that takes time. So this you need to understand when you are working onshore, offshore, there are different regulations, different risks. If you go into an area which has a lot of risks or less risks, that helps the government to negotiate with the investors. And would the government do this? Probably not. Would you think that you take like the money from public schools to education to health to invest in 1 to 10 chance and maybe spend $200 million, $5 billion you lose? Probably not. That's why usually the government prefers the investor come and do the work on my behalf. Then you also need to understand the relationship between the state. Because some states, for example in Angola, they have the state company is the government and he's also your partner. And then how you work with when you have a state which is your joint venture partner, here you have as well. Here you have as well the Nuna Oil is also a state entity. But differently here than other places, Nuna Oil doesn't have authority. He's just a caring partner in the project. In some countries, they need to approve your bills. That gets more complicated. Or sometimes here you see conflict of interest. If you go to UK, Norway, they separate it. Who has the promoting license and who do the health and safety? Because before they're the same people. So how can you actually encourage me to produce more and at the same time say, hang on a second, let's check for security and health and safety. So we usually have to separate those entities because they might be conflicting interests. Then you have the fact that the government doesn't want to do this. Probably want to allow investors to do that. Then you need to have a framework to do this. And this framework is going to be either through regulations, which is the case you have most of the Nordic countries, or you go with the contract. And the contract has to be one of those here. And the contract is going to be either license, which is common in the United States, Canada, Norway, UK, etc. Then you also have a production sharing, which is actually more common in the developing nations, and the service contract. What is the difference? The first one, which you have here in Denmark and also in Greenland, and you have in Norway and UK, is a tax regime. Pretty much whatever you produce, company, is yours. You just pay me some taxation. It can be called royalty, it can be called withhold taxes, whatever you might define it. Then you have the other countries in more like initially in Bolivia, then later was Indonesia, say, no, I don't want the investor to take all this oil and gas. That's not fair. I want to take part of it. Let's call the share regime. And usually it's like 60% of the oil goes to the state, 40% goes to the company. But some companies say, oh, how about we have that plus taxation? That sounds better. And that's what most countries do, unfortunately, in most part of the world. Because they say, this is mine, I need to take more share. And you have countries from political sensitivity. Like, for example, I work also in Iran. I just came from there like 3 weeks ago. When the constitution in Iran is forbidden to have any sharing of profits. They only allow you service. So pretty much the oil and gas companies are hired and pay a fee whatever they produce. That's a service contract. That's what you have in Central Iraq and historically Mexico. So what is the difference between them if you were the government? Number one is commercial risks. In the first 2 cases here, the government takes no risk. If the company invest $200 million and find nothing, too bad. That's your loss, that's your risk. In the third one, no, the government might take some risks. So of course that the government only do that when you have reserves, because there is no risk. Just come and produce more from this field. Ownership, it changes as well. If you are, for example, in Denmark, in Greenland, and in Norway, the government doesn't own the oil. Who owns what is produced is the investor. And then you might say, oh, for energy security, this is not very smart. But you can have a regulation called domestic market obligation. You can force them just to sell internally, not to export. If you're in the EU, you might have an issue with European Union regulation, etc. But some other countries don't have that problem. Control of operations. Usually investors make decisions because that's their money. In other countries, it's different. The government has more control. But it depends on the kind of case. The government usually is concerned on three cases. Number one, what is your minimum commitment? Before I sign this contract, what do you promise to do here? And the guarantees. Number two, if you find something, what is the development plan? How are you going to develop this? And then number three, when things are done, how you remove things, the decommissioning. That's usually the three key things the government is involved. Booking reserves is a accounting issue that is important for oil and gas company, because in the first two cases, if the oil and gas company found, oh, I found $1 billion reserve, you can add that into the balance sheet in your company, and if you're listed, you might be worth a lot of money. In a service, you cannot, because it's not your money, oil. You're not going to have the right to produce them. And from politics, if you work in Western countries, they prefer concession, because it gives more freedom to investor in theory to do things. And if you work in a developing, you tend to prefer a production or a service, because you have more control in theory of what's out there. What is important to understand as well is that your host government contract should be correlated with number one, your constitution. If you're an investor, the first thing I'll look is the constitution. In Mexico, for example, in Iraq is confusing. The constitution says you need to talk with all the regions, but the regions don't talk to each other. Kurdistan don't talk to the federal government, so each one do whatever they wish, which in theory is unconstitutional. So you're signing a contract that in theory is void. And why people are signing? Because they're producing 200 barrels per day. So they're making over $1 million per day. So that's an economic risk, not a legal risk. Then you need to see dispute. For example, today the most disputed area in the world is the South China Sea. There are several different countries saying they own the same place or similar place. And one of these entities, I think it was Philippines, tried to award the license there, and the Chinese vessel with destroyer say you have 2 hours to leave the area before I sink you. And of course they just say, okay, go back to Philippines, because you don't have an issue with China. And then the day US presence is more likely because they're the only one who can compete with China. So we need to understand what are these issues as well. If we're going to offer an area that a neighboring country say they also have the right for that area. And as an investor, I'll be concerned about, you're familiar with BIT. It's called Bilateral Investment Treaty. It's a treaty signed between two separate states that tell you, I will treat you fairly, and if there's a dispute, we solve it international arbitration or whatever procedures. Brazil doesn't have that. Few countries don't have. But of course, we say that we are very friendly, we're not going to expropriate you. Believe me or not, that's up to you to decide. But most countries prefer to do that, especially for developing nations. And the country who has more BIT in the world is Switzerland. Switzerland is number one, and also have the Netherlands, also is one of the most. What is the issue have? For example, Venezuela had issue with Exxon. And the Venezuela government say, I will expropriate to Exxon. Because now the business is the following. My company owns 51% of your company. If you don't like, go home. And Exxon say, no, you cannot do that, and I will use arbitration. And they want to use the arbitration from the Netherlands, because they did this investment for the Dutch entity. And then Chavez said, you know what? We denounce this agreement. This agreement is no longer valid. But you can do that, but you have a transition period that is still going to apply to you. So at the end of the day, those agreements give protection to investors they like to see on your agreement. What are the different views you have? If I'm a company, number one rule is making profit. I love to do social responsibility. I love to help people, but I cannot do that if I don't make money, because I'm not an NGO. I'm a business company. So that's number one. I need to make profits. And that varies. If I am a Statoil, if I'm BP, if I'm a smaller company, my costs, my business perspective is different. My rate of return might vary from this company to another. That's why smaller projects work for smaller companies because their cost is much lower. Larger projects works for bigger companies because they have the mass capacity to do it and they're not interested in small profits. Number two is reserves. They want to make sure they have access to the oil and gas down there. Number three, especially in the work in a more hostile jurisdiction, I want to sure if things go well, I want to send this money back home. I don't want to keep it in whatever jurisdiction that might be. What is important is always stability, and that's the funny part. Because when we negotiate this contract, imagine you come here to Greenland. What do you have here? Not much, right? And you offer me amazing terms. No royalty for you for many years. If you go to Morocco, they give you 10 years of tax exemption. 10 years, you don't pay tax. Wow, great. And you sign it, and you find oil, they say, let's sit and negotiate this, because we don't like this. That happens all the time. Oil and gas industry, the problem is when you find something. When you don't find, there is no problem. When you find something, there's a problem. Because the government always thinks he gives you an amazing bargain. And you're gonna have a revolution back home if he doesn't change these terms. So what you want as an investor? Stability in your contract. Anything which is uncertain, you are downgraded from an investment point of view. You're not safe country to invest. Then, of course, taxation. I don't want to pay tax too many times. If I'm from Denmark, doing business in Angola, you already pay tax in Angola. Do I need to pay tax back in Denmark again? Yes or no? It depends on your tax regime. If you're American citizen, anybody here is from America? It's one of the few countries in the world that as an individual, you always pay tax in America. Let's say you live here in Greenland as an American. You have to pay tax here, and you still have to pay tax in US. One of the few places in the world for individual. This usually works for corporations. Nowadays, I look to many oil and gas companies, I get confused when I enter the website. They look like renewable energy, they look like NGOs, because the first thing you see is working with the people, solar projects, and many things, but actually that's a fraction of their project. Because today, reputation is very important, which before it was not. And maybe it's important here, not maybe in the middle of the desert down there. So that's why it's important to check. Government has a different view. I'm giving you the contract today. This contract might be valid for 20 years. Here in Greenland, for example, if you sign this contract here, ask the government how much money they get out of there. It's close to zero. Very small fraction of payment. The serious money comes with production. So many countries, they say like, hang on a second, I'm not gonna give you for free. You need to pay me something to sign. It's called signature bonus. Of course, Brazil signed a contract like that 3 years ago, 4 years. You know how much they pay just to enter the area? $7 billion. They say to actually have this contract, you pay $7 billion. Of course, they're signing many reserves. How much you can ask here? Not much, because you only have this risk. So your government is thinking from a short, mid, long term. On the thing you want, you don't want to invest the public money. Maybe you should. Because if you, for example, go to have an area, you have no idea what's out there, come and nobody's going to give you money. If you do a little bit of work, you might add more value and sell for much better. Sometimes the government should put some money, but not too much money. Other thing as well, you want to look for local communities, how to engage them. Then you need to have the issue of managing expectations. There is always the fact that the local communities want too much, and the investor might want a little bit the reverse. Because from a company point of view, I certainly prefer to hire someone here than go to someone from Denmark or from Norway to fly through here to work here. It's more expensive, he's an expat, I need to pay so many things. Company perspective, locals is better, provided you have the training. And that you need to have a timing. Because if you just have an obligation that I just hire when you have competence, you're not gonna never hire them because you don't have the knowledge. That's why it's important to invest in training. Training is very important. And the most significant is not to have the training to manage the boat. That's you're gonna have 50 jobs, 100 jobs. What really has the knowledge is where you build that ship. Where do you build that platform? That might hire 15,000 people. That might take 5 years construction. This drilling rig might be operating here for 2-3 months and it's gone. So that's you need to think about the bigger plan, just more the short perspective. And then you have the option, okay, I want to bring the investor. You might want to do this, which here, fortunately, most by European regulations, you have to go for tender. But most of Africa, And Asia is like one-to-one negotiation. I take the phone, call the ministry, I'm meeting him tomorrow, and the people have no idea. There is no even public consultation knowledge about that. So here at least you're way off. If it's good or bad, something else, but you have something. Many places you don't have that. And this is really important. Before you give the contract to someone, what are the criteria you're gonna use? The most important here is number 2 and 3, because you should not sign a contract with people who don't have the money and people who don't have the expertise. Otherwise, it's trouble. And especially when you give to companies in UK, for example, because here you don't have this issue, you don't have infrastructure. Because in the end of the day, somebody has to remove this. And they sign the contract with 2 small companies. They bankrupt. Luckily, in the insolvency procedure, somebody took over for them. Otherwise, the British taxpayers, means imagine if you be here, you have to pay to clean up everything. That's why it's very concerning how to work with this. It's important to check, is this company has conditions to come, and the guarantees to make sure that this company can do this later on as well. Other things here is about health and safety. And then nowadays, oil and gas company ask for more concern, but believe me, there is no safe environment. Because it's impossible to guarantee nothing's going to happen. It is impossible to guarantee that every drilling, I will have 15 boats on standby if something goes wrong. It's not economically viable. You can make it as safe as possible, and you can put the best standards as possible. Risk always exists. And here, imagine we are deep offshore, and there is a significant spill. How long it will take until people can come? There is some Arctic cooperation, so companies to recruit and things. There are things you can do, but it's still, risk is always there. So you need to try to manage best as possible. And number 5, you might have issues here, local content. Local content, you can say you have to hire the local people with preference to anyone else. But here you also have to comply with EU rules of competition, and also not to treat unfairly your fellow EU citizens, which makes this a bit harder than other countries. From a government point of view, what do we really care? Number 1, money. Do you pay me money to sign this contract? Yes or no? In US, you need to pay. In Brazil, you need to pay. In Norway, UK, you don't have to pay anything. Just sign the contract. Number 2, I need to make sure you have the competencies to do this. 3, financial strength. 4, that's what Nadia was mentioning here. You might have license that turn out to be not successful. For the company, this is bad. For the government, it's not bad, because you have more information. In the oil and gas industry, more information means more money, because the next companies who are coming here, they're not coming out of the dark blue. You're coming to see, oh, they have done some studies. Same thing, you are sick, and you go to the doctor, and you have no clue about your past. It's different to come here. Oh, look here, I have 200 exams with 20 different people. They can analyze you much better. Oil and gas works the same. You're not going to drill or have a brain surgery because you have headache. You need to do more studies before you do that. The same thing here. As more study you do, you understand more. And if that study shows potential, you can ask more for the next companies. Oh, now, and there is a justification for that. And also here, the final thing, it is the joint venture point of view. Because it's unlikely any company will do the work by itself. It's too much risks, too much money, too much effort. Would you prefer to have one asset, 100%, or you prefer to have 5 assets with 20%? Usually they prefer the second option, because I can divest my risks, investing in maybe in Greenland, maybe in Norway, maybe in US, maybe in Brazil or in Argentina. So if things go wrong in Argentina, I can still have my things in Brazil. And the same thing around. You don't want to put all your money. For example, there was a foreign company who invested a lot of money in Greenland. It was very unsuccessful. They almost went insolvent. So that's the issue. You need to try to balance your risks. So you need a joint venture, which is an agreement to regulate the relationship of these investors. And usually, which here is one of the exceptions, many of my fellow colleagues, they don't like this. I'm thinking now from an investor point of view. Forget about the government. If you go to Greenland, if you go to Denmark, if you go to Iceland, if you go to Norway, and a few other countries, the government show you what is a joint venture. They say, to come to this country, you use my model form. And I'll be investor and say, hang on a second. Why do you care my relationship with my investors? Because towards the agreement between me and you, the government, which is the license, in this case here, I have a joint liability. If we are 4 people, 25 each, anything goes wrong, you can come after all of us because we are joint several liable. Even if I have 2%, you can come after me 100%. And in case of BP, in the accident, who knows anybody else who was there? There were 3 companies. Anybody here remember the Gulf of Mexico accident? Yes. Can anybody here in this room name the 2 other companies? No. There are 2 of them we call Anadarko from US and Mitsui from Japan. They have 40% almost of the project. People have no clue because everybody wants what? Let's sue BP. And then BP solved their problem with their partners because usually the view is that the joint venture relationship is not a governmental relationship. It's an investor. Because the government say, to change your shareholders, you need to make my approval. To change who is the leader, you get my approval. And actually, to do the investment, you need my approval. So why do I care how you work between yourself? That's why over 80% of the world, the joint venture is a private agreement that the investor decided how they want to work itself. But the Norwegians had this great idea that the government should do this. And the Norwegians say, let's do this. So the Norwegians create their own version of the host government joint venture, and they force the company to sign this. Then Greenland say, Denmark, that sounds good. Iceland, that's fantastic. But if you work with a foreign company from the United States and other place, they think it's a bad idea. And that's reduced a little bit your attractiveness, because you're forcing people to do things they don't like. If I'm the government, I have a different view. I might say, well, hang on a second. You have an investor. I don't know, for example, if some of you, let's say you have a house, and I own the house, and you pay rent for me. You have 4 tenants. If some of you is not paying the rent, I don't know. Because on the day, you make a group that all of you put the money together and pay me. So if somebody's not paying, maybe your colleague is contributing on behalf. So the government being part of this and have the joint venture, you make sure that you know a little bit more what's happening in this consortium. And also, the government reduced the investment time, because some companies, I have spent some time, a year and a half negotiating this agreement. A year and a half. If you go to Norway and Denmark, it's there. So there's not much to negotiate. So you save time and costs. And of course, the model they use here is not so different from the international standard. It's not a freaking Frankenstein. And you say, these people here are crazy. Not. So at the end of the day, you always have to think that everything you do, you might increase public perception, you might increase public participation, you might protect the government, but on the other hand, you might not please the investors. So that's why you need to try to balance expectations. And the key problem you have in this industry, that lack of good communication. Because many people think that you talk oil and gas, I'll be rich. I'll get a lot of money, and everybody's going to be employed. That is certainly not the case. So if you don't have this, for example, one company in Kenya, is actually from Ireland, it started to do, and it started to find oil. And it still won't take 10 years to produce. The next day, they had 2,000 people lying down in front of the company. Say, so when do you hire me? And it was a mess. Because in the day, there is a huge expectation by the local community that when you work with oil and gas, it means there is a job for everybody. Not necessarily. And are you qualified? Probably not. What is the training place? Do I have to do? Does the government have to do? Does the government pay me back, or who pay for that? So if those things are not clear, then you end up in a problem like if you go to Nigeria, for example. What they do, they blow out the pipeline because they don't like how you're doing here. So you want to avoid that. So that's why you need to manage expectations. Thank you.
Thank you, Eduardo, for an enlightening and frank exposition of some of the challenges from the investor perspective. I think we can safely say that Greenland isn't quite Libya, but at the same time, we're probably not quite up there with Norway just yet, just because we don't have yet a commercial oil find. So I'd like to open it to the floor for questions. Emma.
Thank you, Eduardo, for a really, really interesting presentation. I'm very interested in what you were saying about local hiring and the different models, hiring and training. And I wasn't quite sure what you were sort of recommending for Greenland, but I know, for instance, two models. One is Qatar, say, where the local population is very small and they focus their training on the management side of development. And then there's Uzbekistan, where they have a bigger population that travels around the country, and they have a lot of training in construction of projects, and that workforce moves around the country, so they don't want people coming in with their construction workforces. So in Qatar, companies come in with their construction workforces and they go out, and the people that remain are the managers. So what do you think for a country like Greenland with a very small population, what would you recommend for the focus on training? Or should it be a combination of both because of the relative skills in the existing population?
That's a very good question, like $1 million question that most countries try to find out the answer. So the truth is there is no one fit-all answer. You need to understand who is your country. The most common place to reference for that are three in the oil and gas industry in terms of who has more experience with that. It's Brazil, Norway, Nigeria. And the most successful you could claim is Norway, and the least successful you say is Nigeria, then followed by Brazil. Because the issue was that expectations. Norway managed to be more progressive, more realistic within time, much smaller society, which has much more training from shipping. They can manage to adapt quickly to the offshore industry and go to other countries like Brazil and Nigeria. Let's say, for example, in Greenland, you pass a new rule here that tomorrow any company to work in this country has to hire 100%. Brazil said 90% of local people. How many geologists do you have here? How many scientists you have here? How many? Nobody. So what you do, you work with either you breach the contract or you ask for exemption. It doesn't work. But actually, other countries in Africa just put a policy that you hire whenever is possible, whenever they have the qualification. That might mean the next 30, 40 years. You don't want that. So I think the ideal things to do is a progression. And you start to see like low qualified jobs, no exemption. You need to hire the local people. Because I'm sure there's people who can do catering, people who do secretariat, they'll be able to do. Top management, for example, in Iran. In Iran, they have a new policy that within 20 years, 100% should be local. But they didn't draft it well. You cannot do nothing until the 19 years and 11 months. So that's not what you want. So you want to have a progression with the first 5 years, 20, 30%, the first 10 years, 50%, and you progress. And in the day, of course, you should focus on the management, because that's where you have more the added value. But the real value in the oil and gas industry, it is people who, if you think about employment, and because Qatar doesn't have these issues, a small population, very rich countries, there's not the same example. Even here, Kuwait is a small population as well. But the key issue what you want to have is where you have jobs is more about construction. Because if you think about vessel, some oil and gas company, sometimes it can have 5 people working there from the oil and gas company. Because they don't do the work. Who do the work is a service. I don't know if you heard about a company called Halliburton, Schlumberger, one of the largest in the world. They do the work. BP, Statoil, no. They just hire them and have a few guys checking what they're doing. So if you think about, if you're not have policies for a Halliburton point of view, etc., just focusing the BP, Statoil, and Akin, you're gonna have not many employment. But if you have an employment that encourage the service contractors, the oil and gas companies, and the construction, then you can have this more or less what Norway has done. And the key thing you need to ask yourself is this: do you have a local company who can compete internationally? If the answer is yes, you have done a good job. If the answer is no, you actually, for example, in Brazil it's possible, but it costs more because they're not as efficient, etc. So you might do this, but you have another burden in the market because people comply with the law, but not being very successful. Norway has done this better, that it can have Norwegian companies operating more outside Norway. For example, there's a company called Aker Solution. It's a large Norwegian company. Most of the profits come from abroad. That's a successful, when you actually train your people to be good even internationally, because the knowledge from oil and gas companies can work in here and can work in Denmark, can work in Brazil, can work in Uganda. When you train your people, you'll be able to spend some time in Qatar, in Aberdeen, in Rio de Janeiro, in Houston. That's what you aim for, but you need a transition. If you ask too much in the beginning, it's going to be a mess. If you don't ask enough, you don't go anywhere. So you need to get a progression.
I'm still Christina from Copenhagen Business School. So my work is between organizational strategies and long time and environmental disruption, or you could call it the Anthropocene. So you having this broad overview makes it really interesting to hear you. What do you see that these big companies and big joint ventures, how are their investment horizons when we talk about the phasing out of oil? I mean, it's an obvious question to answer, to ask, of course, because they're already dealing with it in Norway. We've seen Maersk in Denmark, they've sold off their entire oil division. So what's happening now? What are the tendencies in terms of thinking, you know, 50 years into the future or 100, which should be kind of a time horizon when the projects are this large and take so long time to build up?
That's a very good question, and it's hard to answer as well. But I think that my point of view will be the following. First, you need to separate oil than gas.
Let's take oil then.
Yes, because gas probably will stay much longer than oil. Let's just focus on the oil side. On the oil side, the most predictions you find out there, if you go until 2050, is pretty high. It might go still going to be, I mean, these things forecasts can change according to different progressive technology, but most forecasts you see from the international agencies and most oil and gas companies, they foresee at least 2050, you're still going to have at least between 25 to 40% of the market. And oil...
What, 25 to 40% of?
Of the market, but depends on which market you're talking about. Then you have the energy market. What you probably is going to decrease is transportation, but transportation also requires a lot of infrastructure. Probably in the Scandinavia, it's going to be significant less, but if you go to Asia and you go to Africa, it might last a bit longer, because, for example, in Norway, I used to live there, there's so many electric vehicles, and if you go elsewhere in the world, you don't have so much. But I mean, it's not related to oil, but most electric cars requires a lot of lithium, which is a mineral resources. And actually, if you think about pollution point of view, the amount of lithium required from one electric car battery is apparently equivalent to 8 years of pollution of one oil and gas car.
That's
so,
a very interesting but different discussion.
Yeah, it's still, but then there is a thing that the fact that it's still, you think about asphalt, for example, you build the roads, many places, you think about the plastic, you think about, there's so many byproducts of oil and gas, even for pharmaceutical. There's significant products, because I'm not actually an engineer, I don't know all of the byproducts, but there's a significant amount of them. So I think that if you think for the next 20 years, not much changes, the next 10, 15 years. But if you think about the next 50 to 100, that is another story. Then oil is going to be, not today is the predominant. If you look at the fossil fuels, they predominate most of these markets. But if you look for the next, as you go 15, 30, then it starts to be less predominant. Go to 2050, it's no longer predominant. They need to work with others together. And after 50 years, nobody people have many predictions. But historically, at least 4 times, they said the oil is going to be done by the early 900s. They say it's going to be done by the mid-900s. Oil is going to be done by the beginning of 2000. Oil is going to be done by the beginning of 2010, and it still is products. Because the key thing you need to think is 2.
So is there any work on 2050 and beyond?
Not much. Most predictions is 2050, which is pretty far from today. And most projects...
Depends on the view.
And if you think from a geology, yes, we're still like millions of years, no. But if you think about from investment, most oil and gas projects is between 15 to 30, 40 years. So that's what they really care. And they need to predict the market, because I need to sell this product within the next 30, 40 years to recover my investment. So that's the key thing they're looking for.
Thank you.
You're welcome.
Oh, no. Karen Bailey?
Thank you very much. So I thought this was a very interesting presentation also. Now like I think a lot of other people in this room, my background is in law, and I tend to maybe consider myself a skeptical lawyer, which means that I certainly believe in the strength of law to do a lot of good things. But unfortunately, I also know that many of the people working with law, including corporate lawyers, are really, really good at using law to also limit the actions that they should take. So from your perspective, working with extractive companies in the Global South, I would be very interested to hear your experience with the way that companies, governments as well, sometimes use the law to on the one hand, of course, commit to doing right, and on the other hand, to use contractual obligations to reduce the extent of actions they should take, to assess their impact on society, and to manage that impact on society. And finally, also to hear your views on how, what are some of the arguments that you have seen work through your research to get managers as well as corporate lawyers to understand that if they really want to do well, maybe if we talk to social license to operate language, or if we think about there are opportunities to actually be awarded more concessions, more contracts, if they engage actively with taking seriously the concern that society has, the local communities have, with their impact, the critique that they get from civil society organizations and others for not engaging adequately with those concerns, for not engaging adequately with public participation, free, prior and informed consent. This may actually harm their economic opportunities. And so what are the arguments that you have seen work to get them to say, okay, we will go on board this, we will do more, rather than just reducing the obligations that we undertake?
That is a very interesting question. And I think to answer that requires me to go by step. First question is to say, who do you represent? And the key question, I think, is, are you a listed company or not? That makes a big difference. Because if I'm not a listed company, you don't even heard of me maybe. And you have no idea about my information. I don't publish anything. I work for a few companies that even have a website. How would you go to the middle of South America to try to get information about the company, or Africa? Very difficult. If I am like a large corporation and I have listed, is a different story. Second story as well, who are my investors? Makes a big difference. If my investors expect me to have more transparency, if my investor, for example, has some pension funds, Norwegian state, foreign funds, they expect me to have a much higher level of commitment. And I work, for example, and I know this company, I'm not going to name the company. Somewhere in Central Africa, I was working from a company, and we were trying to acquire some position in this country. And then when I was looking to the map of the license they have, I was shocked. Half of the area was in a national reserve forest. And I asked their top management, how do you get this? Because clearly, you're not complying with the law. Because, and to be even more specific, that forest is from the indigenous mountain gorilla. There are less than 2,000 out there. And I said, are you familiar? What you're doing? The guy said, no, it's okay, Eduardo. We're talking with the government. They're in the process to denationalize the forest, and we'll be good to go. And I said, well, but it doesn't work like that. And at the end of the day, if you go to Netflix, and if you Google, I'm not going to mention the name of the company, if you Google to mountain gorillas, you find what I'm talking about. And you see a little bit, it's a bit not true what they said, that's mostly true. So these companies exist. And of course, from a company point of view, what you want is two separate things. One, legally, I want to reduce my liability. Because I can do the sky for you because I wish to do so. I don't want to put down the contract, I'll build the sky for you. So from a company point of view, you always try to negotiate the least terms commitment. Because in the day, you still have a political point of view, yes or no. But the truth to be said, that, for example, let's say the good clause you can use to get away, and I have seen a number of times, is force majeure. Quite often, you can declare force majeure on some rebels, destroying 100 different things, and you just get out of the country paying nothing. And legally speaking, you're protected. Because it depends on the terms you agreed, you're good to go home. But how about reputation? People would put on the TV, showing here, look at this company, left the country, oil spill, mass everywhere. So nowadays, people are way more concerned, not really with the commitment, more about reputation. For example, are you familiar with the Brent Spar case in the UK? That's one example. Legally speaking, Shell has a platform in the middle of the North Sea. They needed to remove this platform. but it's very expensive. So what is the cheaper way? You cut, clear for navigation, comply with UNCLOS regulation, and you leave the remaining on the bottom, which is called rake to the reef. Even can be environmental friendly. And the UK agency at the time, they assess, environmental agent assess, shareholders from Shell assess, good option, let's do it. But Greenpeace say, whoa, 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 hang on a second. I cannot throw this on the floor, especially starting in Germany. If I throw this, I get a fine. How come Shell can dump a few thousands of tons in the middle of the ocean? That's okay. So at the end of the day, the public perception made a boycott to Shell, especially in Europe. They reduced the profit. They revised the plan, not because of legal commitment, because of reputation. It cost 4 times more. And actually, the claims of Greenpeace were completely inaccurate. Completely. They claimed that they were going to dump like hundreds of thousands, which the reality was a fraction of that. But it doesn't matter. The concept was that what you're doing is not okay. So that's why I think nowadays it still depends on who you are, who you represent, and if you're not public, and if you are private company and smaller company, unfortunately, afraid you might have not sound the same transparent. Even if a large company, sometimes what you read in the paper is not the same when you go to somewhere far away. And here, at least, you have more access. Well, how many people here have go to DRC, for example? You don't even get a visa to go there. How do you know the mess they're doing there? You know what I mean? NGOs here, you're welcome. Half of the place I work, you're certainly not welcome to go there. So how do you report transparently? That's the issue you have, I find.
Okay, just one very last quick question from Kari.
Hi, I'm Gorman Hansen from the WWF. I've been living here in Nuuk for 9 years, and I followed the cairn oil exploitation here in 10 and 11. And just to, have you heard about the impact benefit agreement we have here in Greenland?
Yep.
And then in the drilling in 2010, the IBA was signed after the drilling has started. That is how it's sometimes goes here in Greenland. And the cairn used red listed chemicals both in 10 and 11. And I talked to the CEO and said, if you bring the chemicals, they recycle from the one drilling to another. If you bring the chemicals, drilling mud to Norway and process them in land instead of dumping it here in Greenland, that would be so great public relation for you. And how much was it cost? It would cost about 10 million Danish kroner, he said. But he won't do it because they didn't care. They were not obligated to do it. So Cairn was a small company that had not that priority for environment or the reputation. So here in Greenland, the government is desperate to have something going on, just to show that the IBA wasn't signed when the drilling started, and they had permission to dump all the chemicals here in Greenlandic waters. So we have a desperation here in Greenland we have to be very careful about.
And imagine in other countries, like at least here you have also support. It's a small country, small population, and support from Denmark. Imagine you go to a third developing nation which is extremely poor, has millions of people, and there is nobody who wants to invest. Because the problem is this: the countries that don't have reputation are blacklisted from large companies because of human rights violation, in theory, or it's true or not, that's not the story. They have not good reputation for environmental procedures, so many companies, they don't go there. Unless there is significant amount of resources, they try to think a way to go there. But how it usually happens in the oil and gas industry, you need companies like Kern, who got a lot of money from India to come to invest here, is that you need smaller players to take the first risks. Because they can take this risk, reputation, they don't care. And if they find something, then come the larger corporations, buy them off, and try to find a better way to work out. So that's the way sometimes it works, that one benefit the other, and they don't look for that. And unfortunately it's true, because the government is keen to have investment. Some countries put higher standards, other a bit less. And here, you certainly are towards the highest standard. You're not going to denationalize, protect the area to find someone to come here. And you need to comply with EU laws as well, as far as I understand. But yes, you also have this issue. So that's why you look for companies with high reputation and more background, because you know in theory they're going to do the work, and if they don't, you have money to sue them for. And if a small company bankrupt, what do you do?
I think that brings to an end our first session. So coffee should be waiting outside if my caterer has done his job. He was reminded repeatedly. So we'll take a very short 15-minute break, come back for a 45-minute open discussion where you all have a chance to make comments, not just ask questions of the experts, so-called, but also to bring your own perspectives to the table. So don't eat too much cake, because we'll be having lunch also after that discussion session. Thank you.